Good day to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night. Welcome! On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Vincent, and I will be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firm in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today. Skilled trader, mentor, and role model within our community. First, let me introduce the ever-composed, always insightful Daisy. Welcome, Daisy.
Thank you so much, Vincent. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's sections. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is a kind of platform that doesn't just fund trades, it's build traders.
Absolutely. And next to her is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Raf.
Thank you, Vincent, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system. From packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we are here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or prop firms. Now, I want to be clear. This isn't about sales. This is about understanding. We want you to know what you are signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading package. We will be discussing in details. We will explain the logic behind each one, what kind of traders they ever look at your package and thought, which one is right for me. Today we will answer that.
And more than that, we'll also do a live comparison between packages. We'll be breaking down pricing, account size, maximum drawdown, consistency rules, and even payout, side by side, to help you make a fully informed decision. It's one thing to see numbers on the website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's section. We will explain what the daily loss limit is, how it's calculated, why it includes both close and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policies.
And we won't just explain rules in isolation. We will explain them in the context of live trading decisions. I will share some personal examples of mistakes I mixed when I first started trading under funded conditions and how I adjust this. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. We have had some amazing response to our promotion, but also some confusion. So we'll be showing you exactly what to do, step by step.
And from there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing models. This is the heart of what makes us different from platforms. When you trade on funded accounts and generate profits without breaking rules, we share that profit with you up to 90%, but there more than to it, just the percentage. We will explain the full payout cycle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders. You're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program. And we will do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale up paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderator are watching and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave the timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to be real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So, if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you a full picture of who WeMasterTrade really is, what we believe in, and why we have built this platform the way we have. Because when you're putting your trust and you're trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined, as always, by two people who live and breathe this principle, Daisy and Raph. Let's start at the beginning.
Thanks, Vincent. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their backgrounds, locations, or financial situations. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor network, and copy trading techs, WeMasterTrade were designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note that WeMasterTrade is not a broker, that's not just a label, it's a fundamental difference. We don't profit from spreads or commissions, our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our broker sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow the rules, we want them to understand the logic behind the structures. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to a consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We have designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funded account. And to ensure that our system can meet global standards, WeMasterTrade is proud to hold an ISO 21002 2018 certification, which confirms that our educational product and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certifications is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has a position itself with a real operational stability, compliance framework, and internal accountabilities. We're here not for seasons, we're here to help build career.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how we must help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders, we have women re-enter the finance world after career breaks, and we have had young professionals from underbanked regions finally access the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators share weekly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respect for competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you will see that we can actually listen.
And I will speak honestly here, in many platforms, trader is just a customer. As we met the trader is the product, Your performance drives the business, your voice shapes the platform, and your consistency determine how far we can scale together. That's mutual accountability is rare, and it is something we are proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funding accounts, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward before performance over emotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a broad firm, it's a trading movement. And if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you Daisy and Ralph for that deep and honest walkthrough. Coming up next, we will going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of result you can expect from each. Now that we explore who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, Vincent. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different trends, risk appetites, and timelines.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. Its structure is fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three steps in total: phase 1, phase 2, and the funded state.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is $800, without breaching a 5% daily loss is $500, with a 10% overall loss limit is $1,000. You will have unlimited time to achieve it. That's a key difference from many platforms. We don't pressure you with the deadline.
And once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That means $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where your trades with real capital have no profit targets and your profit share jump to 90%. That's one of the highest in the industries.
So who is the 10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with a lower pressures and learn the system. If you are still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect bucket to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50K, and 100,000. The structure is similar, two phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the $50,000 challenge, you will need to hit a $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1/100, giving you room to adjust position sizing.
So the 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you have already passed all the props or challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the 10,000 challenge. This fee is refundable once you become funded, and minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluation, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through each of the 5 main instant funding package standards: 5, 10, 10, 5, 10, 0, 5, 10, 10 novices, and customized. We will compare the detail, but more importantly, we will help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, balance-based limit, scale up plan toward 1 million, support for EAs, swing trades, scalping, and even AFTs. Now, let's go package by package. And there we go. Daisy Raf, I want you to chime in with real advice. Who should actually choose which one? And what kind of traders you even succeed with each?
Let's start with the standard package. I always describe it one as a best friend for traders who just want stability. You are getting up to $200,000 in capitals with a very manageable 4% daily loss limit and 6% overall limit.
It's like that camp steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $1, stock at just $0.07 per lot.
And everything is allowed: news trading, scabbing, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategy, wants a full range of assets, and plan to play the long game, this is your sweet spot.
And it's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I would also say it suits swing traders. The 4 to 6% risk profile gives just enough flexibility to hold a multi-day position, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling up to 2,100, but you now get a 5% daily loss and the wider 10% overall limit. Why does that matter?
Well, that execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to break, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get the full support for scalpings, EAs, new tradings is very trader friendly.
Well, this is best for day traders, especially those trading assets like NASDAQ or gold that move fast. If you have got a tested intraday strategies and just need some risk spreading room, this is your package.
And also for traders who want structures but don't mind having that profit target, the clear milestone motivates some people, especially if they are payout oriented.
And now here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target, none, zero.
And that's a blessing for a high precision trader. You are no longer chasing numbers, you just focus protecting equities and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
Veritan, swing traders, risk conscious trader, people who prioritize consistency over speed. If that you will thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
And now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no BC remove profit consistency tracking, right?
Exactly, Vincent. Same 5 or 10 risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
The sales trades copier and not allowed in the one, so it's for manual traders only. And you need to trade responsibly. But for aggressive traders who sometimes hit big spikes, this is place.
It's perfect for high risk, high reward traders or anyone who has issue with consistency rules at other firms. You trade how you want, just keep it inside the draw box.
And last but not least, the customized package. This is WeMasterTrade. You know what you need? Let's build it together.
You can adjust daily loss, overloss to your likings. Plus, you can fund up to $400,000 more than any other account.
It's premium, flexible and comes with own trading style allowed, including EAs, nail trading, weekend holding, HFT and more. So who's it for? Top-tier professional at hedge fund traders, signal riders, high volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if your tries are the mother and nothing quite fit, build your own blueprints with customized. That's a freedom I rare.
To sum up, every instant funding package we offer comes with a clear risk parameters, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as the 1 day in.
And no matter your strategies, tappings, swing, or goals or manual, they're an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperform the biggest promise.
Up next, we walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rule that power our entire platform. Alright traders, now that you have seen the packages, let's talk about the part that either makes or break your account. That's right, it's time to dig into the trading rules. and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their cash, it comes down to one thing, the daily loss limit.
Yes, the strategic daily loss is the one the traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here the good news, when you understand how it works, really works, it's become one of your best tools for risk controls. So today, let's break it down from the top to bottom.
So what is the daily loss limit? Also called the maximum daily loss.
This is the maximum amount of loss you are allowed to incur in both floating and closed trades. On any single trading days, if your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
If you own a 4% daily lot limit, we calculate it of the higher numbers, $107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can drop below 102,000 or boom, your account is gone.
Right. And I think it's important to point this one out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is 100,000 but your equity is 99,000 because your open trades are slightly in loss.
Since the balance is higher, we base the 4% on the interior balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it jumps to 90, 95, 999, auto liquidation kicks in. No warning, no margin call.
So what happens if you break it? The system will send a market order to close all trades, everything liquidates, your account is disabled, and you can't trade again unless you purchase a new package.
And here the kickers, the auto close happens when the system detects the threshold were crossed, but due to market fluctuation, your final P&L might look worse than the actual threshold. That's because the system executes the closures based on the price slippage at the time of liquidation.
So even if you only intended to take a 3,900 loss, one slippage pass by in gold or NASDAQ and suddenly it's 4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, know your buffers. Never plan trades to take you right up to the edge of your limits. Leave at least 10 to 15% room below the max loss, especially in violated markets.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboard that show your live loss status. Use them, check them. Don't rely on memory.
Also, hold trading after a big loss early in the day. If you lost 3% in the first hour of London sections, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFP with full lot size, you are practically begging to break the daily loss rule, cut position size, and ride past volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1 is over leveraging. traders opening positions that are 5, 6, 7% of their account thinking they will close quickly, but if the trade turns red flags, this is already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 big gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity line is your score.
I always say this to new traders. The daily loss rule isn't your enemies, it's just your account's airbags. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. WeMasterTrade funds you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. In the reverse section, we cover the daily loss rule, and if you haven't already clicked that one, you are missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the line that can be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they will chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is, your real-time capital, including open trades, ever drops below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max lot is 6%, which is 3,000.
This means your equity then can never go below $47,000 ever. Doesn't matter if you make a $1,000 yesterday, the total lot from your highest points back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost 2,000 in closed trade and you have another 1,240 in red, your equity is now at $46,800. That's below the limit. Account closed.
And just to be clear, it's not about the net gains or loss across trades. It's about where your equity stands in real time, relative to that stop loss floor.
Here's where it gets interesting and little tricky. Let's say your account grew to $51,000. Congrats, you in the profit.
But your max loss limit is still use your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equal 4,000. So your profit gives you cushion, but the floor never moves.
So what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers, on trades are closed immediately at market price.
And again, like with daily loss, if their volatilities are slippage, or your counts might close out below that line, that's its execution reality.
And most importantly, once it reaches, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning, calculate it manually.
Second, use your profits as protection, not commissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with bull stop placement can take you from safety to shutdown in a few minutes.
And the last is stay cool when you are close. If you are down 5% out of your 6% limits, that's not the time to double down. That's the time to step away, pause, and rethink your tries.
The biggest mistake, underestimating floating drawdown. Traders close 3 losses and think, okay, I still got room, but they forget about the 4 trade floating minus $1,800.
Second is traders who chase recoveries after a bad day. They lose 4% in one day, come back swinging next day and thinking they will make it back, and instead take another 2% that violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, news scandals can get you straight through your limit.
The max lot rule is there for a reason. It is not there to punish you, it's there to protect you from yourself. Every successful traders I know see their stop loss, whether personal or international, as a non-negotiable barrier.
Right, it's a reality check. If you're consistently pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure. And demand loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses. And once reached, your account is gone. Coming up next, we will explore the consistency rule and why steady profits matter more than big spike when it comes to growing, scaling, and hitting bait.
So if you ever made 5,000 in one day, then made 200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the rise of profitabilities and how to stay consistent under WeMasterTrade model.
Alright traders, we talk about the daily loss limit and we just covered the maximum loss rule, two pillars of protecting your capital. But now it's time to shift gear just a little and talk about risk, but about result. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule is right here. The profit consistency rules is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharings, and even scale up. So if you are funded and you're wondering why your payout didn't go through, this rule could be the reason.
Alright viewers, before we dive into the profit consistency rule, we will take a short break and then we'll come back later. Welcome back everyone. In the previous talk, we have talked about the profit consistency rule. So, what is the profit consistency rule? Let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's loss or risk. What we want to see is traders who make profit day after day, even if it's small, that's what we can scale.
Your formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
Best day divided by total profit multiplied by 100 equal profit consistency percentage.
And just to be clear, best day refer to your highest close profits in the single calendar days, and total profits is the sum of all your close profits minus any close losses or open losses across the life of the account.
So let's say you have had the following result over 5 trading days. Day 1, 100, day 2, 200, day 3, minus 50, day 4, 100, and day 5, 60.
That means your total net profits across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal $410.
And your best day was day 2, that 200 profit.
So now we apply the formula 200 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account require 20% profit consistency, which is common. The traders is way above that, so they wouldn't qualify for the payout yet.
So, even though these traders are profitable, they are not consistent enough. They had one big day that may almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you are relying on one or two big days to carry your entire accounts, that's not professional trading. That volatility, you can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, who get structures with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So how to improve your consistency? Let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Once it trades smaller size for a few days. 2. It takes smaller controls win for $200 and $300 days. 3. It avoids big swing trades that could spike your retro again. And the last is spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profits heavily into one day, you might need to rebalance it. The boss might be profitable, but it won't buy this rule unless it's configured with payout logic in mind.
So talking about some common mistakes to avoid. Mistake number 1, traders hitting target early, then taking the rest of the week off. That's inflate your best day and leave the rest of your curve flat.
Mistake number 2 is overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake number 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trader.
And why this rule matters. At the end of the day, isn't about controlling use, it's about building habits that can handle safe If you can't be consistent with $25,000, what's happened when we give you $100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into six-figure funding account.
So don't fear the rule. Understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going and balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade's dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We've walked through the daily loss limit, tackled the maximum account loss, and examined how your profit consistency shaped your long-term payout and growth. And now, we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemies in either markets, but truthfully, it's inconsistent, especially in how much you are risking from one trade to the next.
Well, this rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fee, commission, and swap are counted.
And for some accounts like the 510 OBC package, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes. And that makes you hard to scale.
This rule protects you, both you and the firm. It helps preserve capital, preserve large equity swings, and make sure your app plays out over the time.
So think of it as your account heartbeat. If your position size pulses up and down, 0.5 loss one day, 5 loss the next. The system flags. That's not structure, that's chaos.
This is where it gets technical. But stay with us. The term trade idea isn't just one order. It's a group of trades that share the same logic.
If you open three buy positions on X8 use USD goes at different times, that's one trade idea.
Well, because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they're seen as a single unified positions from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limits.
For example, if you go long on gold, short on GBP/GBY, and short on AUD/USD, and each position has its own distinct direction and asset, those are three separate trade ideas and each one can risk up to 2%.
So what's not allowed? Let's say you go buy on gold and then you go buy again and again. You now have three open positions in the same direction on the same asset.
Yep, the system treats that as one trade idea, so if the combined floating risk or eventual loss from those positions exceeds 2% of your starting balance, boom, you've broken the rule.
And another mistake is opening multiple gold buys, then closing one 10 minutes later and two others together. The system still groups trades with close within 3 minutes of each other, so be mindful of your close timings.
Let's go hands-on. Suppose you have a 100,000 account. The 2% max risk per trade idea means you can lose more than 2,000 on any trade idea total.
You are right to underline if slippage or swap adds a few extra dollars, that's it. Rule broken, account flagged or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funding status or immediately closure.
So here is some tips to stay risk consistent. Tip 1. Set your loss size based on your account risk, not emotion. Know how many bips equal to 2%.
Tip 2 is use stop loss order religiously. Set them based on the risk per trade idea, not random trade level.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one. Size it accordingly.
Tip 5 is if you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro lots if needed. Keep the total exposure below 2%.
The most common reason traders break this rule, which is taking multiple entries on one trade idea, thinking is still separate.
The second is opening high risk trades after win, assuming they are playing with house money. Spoilers, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
This isn't just policies, this is a professional practice. Hedge fund follow this, bank follow this, and real trader follow this.
Exactly, we are not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital. Those are the ones we grow. Those are the traders who go from 25,000 to a million.
If you want to be a professional trader, you have to think like one. And professional traders always know how much they are risking on every trade every day.
And if you are still guessing your loss size or opening trades because the setup feels right, take this as your sign, step it up, get structured.
This is more than a rule, it's a habit. Build it now, and the path toward bigger capital and larger payouts become way more predictable. And that, my friends, wraps up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these, and you are not just staying compliant, you are building a foundation for serious capital management, long-term payouts, and scaling. You are watching the official WeMasterTrade live stream, and the best is still to come. Alright everyone, this is it. You have made it through the risk rule, the profit condition, and the structure of our account. Now, let's talk about why it's all worth it. Because at the end of the day, we know what every trader wants.
More capitals, more room to trade, bigger loss, higher rewards without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale Plan is built to provide. This is your roadmap from being a small account trader to managing a 1 million funding account, and it's not fantasy, it's a clear path with defined milestones.
So what is the scale plan? The scale plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violation, and demonstrate risk control, we increase your capital allocation. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, it isn't tied to subscription model or gimmicks. You don't pay for scale up, you earn it through consistency, profits, and discipline.
And the scaling is aggressive. We are talking about doubling, tripling, and eventually scaling you on the way to 1 million in funding capital, depending on where you start.
So at WeMasterTrade, we offer two types of scale-up path, depending on your account type. First is percentage-based scaling, mostly used for challenge accounts. And the second is amount-based scaling, used in instant funding accounts like 10,000, 25,000, 50,000, and beyond.
Let's start with the percentage-based plan. You begin as an evolution trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you are promoted to level 2 where your capital increase by 50%.
From there, the growth explodes. 300% at level 3, level 4 you get 600%, 1200% in level 5, 2400% in level 6, and the max allocated capital is 1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles. So the system knows you are not just performing, you are stable.
Now, for instant funding account, the scope work with set dollar targets and the plans adjust depending on your initial funded size.
Let's take the 10,000 funded trader as an example. Here's how the level look. 10,000 at level 1, 15,000 at level 2, level 3 is 30,000, 60,000 in level 4, you got 120,000 in level 5, 240,000 in level 6, level 7 is 480,000, 960,000 in level 8, and finally 1 million in level 9.
Each step has its own profit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stage. Once you are beyond level 3 or level 4, the consistency requirement drops, and it becomes all about raw performance and discipline.
If you start with $2,500,000 account, your first profit target is $35,000 account. Hit that with consistency, you are bumped up to $37,000, then $75,000, then $150,000, and all the way to $1,000,000.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
So to move to the next level, here's what you need to do. Reach a specific profit target, avoid all violation, especially max lot or daily loss. Complete at least 2 successful payouts. And lastly, maintain profit consistency if required for that stage.
Once all conditions are met, we issue personalized trading agreements and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading to force the target. Traders push too hard trying to scale fast and end up violating drawdown.
And another one is ignoring consistency in early level. If you make 80% of your profits in one day, that's payout won't qualify. You need to spread your win.
And of course, not planning your growth. You should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling is just financials, it's mentals. Every level brings more capital, but also more responsibilities. If you are trading $10,000, how will you handle $300,000?
Exactly, that's why the scale up is step by step. We test your psychology, your discipline, your patience, long before we hand you 7-figure capital.
And that's what makes it real funding. Not demo hype, not a gimmick. It's a structured capital ladder for real trader.
So if you're wondering whether it's worth staying consistent, passing challenge, and trading patently, it is your answer. From $10,000 to $1 million is possible, and it's been done repeatedly by WeMasterTrade trader.
It starts with one rule following, profit making discipline months, then we grow it.
So take your time, learn the structure, respect the rules. Because here at WeMasterTrade, when we say we scale performance, we mean it. And with that, we wrap up the full walkthrough of WeMasterTrade's funding system, from account setup to risk management to scale up. Whether you're starting with 10,000 or 200,000, the road to 1 million is real. Coming up in our final segment, we will explore the profit sharing model and how payouts are distributed, including timelines, eligibility, and the secrets to getting your profits and out last.
You earn it. Now let's talk about how to get it.
You are watching the WeMasterTrade live stream. Let's finish strong.
Alright traders, we have talked about rules, structure, scaling, discipline. But now, let's talk about rewards. Because what's the point of performing well, staying consistent, and scaling up if you're not going to get it paid for it?
Exactly, this is the part everyone waits for. Because while it's great to trade professionally, there's nothing better than seeing that payout hit your wallet.
And at WeMasterTrade, we don't just fund your trades, we reward your performance. That's why we build tiered profit-sharing models that grow with you.
Let's start with the basics. As a funded traders, you keep a percentage of the profit you generate. It's called your profit share. At WeMasterTrade, your share starts at 50% and grows all the way up to 90%, depending on how many payouts you complete.
Here's how it breaks down. The first payout you get 50%, you get 75% in the second payout, and from the third payout and beyond, it's gonna be 90%.
And remember, this applies to all package types unless otherwise noted. Whether you are trading a challenge account or instant funding, this is a general part.
Now, why not just start everyone at 90%?
Because profit sharing is about trust and performance over time, the first payout proves you are profitable, the second shows you are consistent, and the third, that's when WeMasterTrade goes, okay, you earn the top tier.
And by that point, we know your strategies, your risk management, and your payout behaviors. So it's not just performance, it's a partnership.
Let's talk about exceptions. Because not all packages follow the exact same track.
For the 599 no PC package, if your accounts had breached the risk consistency rules, your profit share get reduced to a fixed 20%, that hard rule.
And for 510 packages, if your total profit is under 6%, the profit share is also fixed at 20%, regardless of payout number. So you need to trade above that threshold to earn the standard 50, 75, and 90 scale.
And for no BC accounts, profit share is also influenced by your daily drawdown behavior. If you have stayed under 1% daily loss, you still qualify for tier payout. But once that crossed, penalties apply.
Payouts are not automatic. You must request them through your trader dashboard. This is a simple process. Choose your amounts, confirm your methods, and submit.
If you don't request it, it stays in your trading account, it's rolled over, not lost.
And you can do this daily, not just weekly or monthly. You have full control.
So about the payment methods you can use, when it comes to receiving funds, we support multiple secure global options. Here's what you can use: the bank transfer via SWIFT or local bank, may incur bank fees, PayPal, Wise, Coinbase, which is cryptocurrencies, Deal Card, and Stripe.
And here the good news, PayPal, Wise, Coinbase, Bills, and Thrive are all free on our side. No hidden withdrawal fee from WeMasterTrade.
Of course, depending on your country or currency, some external fees may apply. like PayPal conversion charges or bank wire processing. But we do everything we can to keep costs minimal.
Once requested, payouts are generally processed within 24 to 48 business hours, sometimes faster, especially for crypto and Stripe. But bank wires may take a bit longer depending on your bank.
And if you are new traders and your payout get flat for consistency review, don't panic. This is a routine part of valuation cycles and often just means a quick dashboard review before approval.
Let's say some quick strategies for those watching who want to make sure their payout go through smoothly every time.
Tips 1 is always check your profit consistency before requesting buyout, especially on the first or the second withdrawal.
Tip 2. Stick to the risk rules, avoid last-minute violations, especially before payout week. A mat loss flag will cancel your withdrawal entirely.
Tip 3 is trace a few more days. If your profits are lopsided, you may need to bring your consistency ratio down to qualify.
And final tip, choose your payment method wisely. Crypto is fast but volatile. Wise is safe and global. Bankwire is secure for large payouts. Just watch the fees.
So, the profit-sharing system at WeMasterTrade isn't just generous, it's strategic. It's designed to reward traders who are disciplined, consistent, and long-term minded.
Your sales grows at your record goal, your capital grows at your discipline grows, and the faster you learn the structure, the faster you get paid.
And that brings us full cycle. From signing up to getting funded, to scaling, to cashing out, you now know for the full journey inside WeMasterTrade. Alright traders, before we end this incredible session, we want to bring everything full cycle. Because today wasn't just about telling you how WeMasterTrade works, it was about showing you what it means to trade with clarity, with capital, and with confidence.
We'll walk through rules, platforms, payout, and promotions, but now let's zoom back out and ground ourselves in what the world is doing today. The market isn't pausing, the news keep coming, and as a funded trader, your edge comes from staying prepared, not just with setup, but with contest.
Good morning, good afternoon, wherever you are in the world. Welcome back to Macro Pulse Live. This is Thursday, July 17th, and today data flows is absolutely packed. Employment, wage growth, retail numbers, and sneaky fairly fat trading.
That's right, whether you are really trading Aussies, pound, or dollar, today's calendar threw some serious curveballs your way. We are seeing pressures on central banks to make sense of mixed signal and trace the clarities. The first one is Australia's event, soft jobs data disappoint. For the employment chain, it is 2,000 versus 21,000 forecast. For the unemployment rate is 4.3% versus 4.1% expected. So let's start with Australia. The labor market came in much weaker than expected, just 2,000 new jobs. That way off from the 21,000 forecast.
Exactly, and it's not just a miss, this is a momentum killers. This tells us hiring slowly, business are cautious, and possibility already feeling high grade pressure from the RBA.
And the unemployment rate rising to 4.3%. That's the highest in a while. Combine that with last week's soft CPI data and the market starting to price out further rate hikes.
AUD/USD react instantly, broke below intraday support, and unless US data flop tonight, this pair could be headed for new monthly lows. Next is United Kingdom labor markets mixed signal. At 1 p.m. GBP data, average earning index 3 million USD of 5.0% in line, but down from 5.4%. Climate count challenge is 25.9K versus 70.8K forecast. Next up, the UK And we got a labor report that, well, makes it we have a 5% still high, still sticky, but slightly down from last month's 5.4%.
But the real surprise is the climate count, 25.9 thousand new jobless claims. That's a spike. It means more people are applying for benefits, and that's not great for sentiment.
This put the Bank of England in a tough spot. On one hand, inflation isn't going away because of the wage number, but on the other, the jobs market is softening.
So GBP traders, buckle up. It's likely we'll get a bit of whipsawing on GBP USD and GBP GBY. Look for the direction from US retail later today. For the last event is United States the triple play at 7:30 p.m. major USD data. The first one is core retail sale, which is 0.3%, recover from minus 0.3%. The next one is retail sale, 0.41%, recover from minus 0.9%. And the last one, unemployment claim, which is 233,000 versus the expected 227,000. Alright, let's dive into the US retail data because this is a major driver today. First up, both core and headline retail sales bounce back into positive territory.
That's a strong sign for consumer demands. Core retail sales especially matter because they thrive out volatile items like the garage light and autos, 0.3%, so that discretionary spending is holding up.
But here's the core bond jobless claim ticket up to 233,000. Not a disaster, but it's something that the Fed will watch. It suggests the labor market might be cooling gradually.
Still, in context with strong retail and sticky core inflation, the Fed might stay on pause, but won't talk rate cut yet. That support moderate USD strength.
For the trading setup and sentiment, so what setup are watching after on this? The AUD USD shock bias break below recent support could accelerate if USD holds. GBP USD caution zone, watch for reversal signs, wages steady, jobs sharp. Euro and USD neutral to bearish ahead of ECB next week. And the last one, USD GBY long bias, especially if risk on sentiment picks up.
And don't forget about the Philip Fed and retail combos, a healthy sign that consumers and factories are still alive. What's S&P 500 Dow and tech name today too. Today macro mix give us a glimpse of central banks as a crossroad. Australia's might be done hiking, the UK's is balancing inflation with job rates, and the US, well, is resilient but not bulletproof.
Stay sharp, don't over leverage, and read the full story behind each number. Thanks for hanging with us. We will see you tomorrow on Macropause Live. Same time, same price. Look up, trader.
Thank you so much for joining us today. We hope you found this session valuable and get some new insights. Remember to subscribe, like, and share this session if it helped you. And stay tuned for our next one. If you have any more questions, feel free to reach out. Until next time, happy trading and take care.